Tax saving, tax avoidance, tax evasion. These are the three terms that we often intermingle. We fail to understand the difference between these three terms. We have heard of many cases of tax evasion. Recently, there was a case in which a political leader was alleged to have evaded tax to the tune of rupees 17 crore. So, what are these three terms? Welcome to KCC channel. Hello everyone. Today we are going to discuss and distinguish between the three terms tax evasion, tax avoidance and tax planning. What are these three terms? We will study them one by having some good examples so that the understanding is distinct and clear. First and foremost is tax evasion. Tax evasion is a method of reducing your taxes in an illegal way. It's illegal and it violates the provisions of law. You reduce your taxes by resorting to some undue means which are not desirable as per the income tax provisions. Example of tax evasion could be you reduce your income and do not report the correct income of yours. You incorporate bogus expenses in your books of accounts to reduce your profits. You inflate your expenses. You incorporate personal expenses as business expenses. You transfer money into offshore accounts in order to evade the income which is derived from them. Tax evasion is illegal and is punishable. Therefore, one should always try to avoid tax evasion. One should never practice tax evasion. Next in line is tax avoidance. Tax avoidance is a method to utilize the lacuna, the gaps, the loopholes in the tax laws in order to reduce one's taxes. Now, there is a very interesting thing about tax avoidance. Tax avoidance means that you are avoiding the tax within the provisions of the law, in the sense that you are trying to reduce your taxes at the same time you are complying with the law. However, this method is immoral. It is not a moral method which you are utilizing, in the sense that because you are taking advantage of the lacuna, the drafting mistakes in the provisions of the law. Example of tax avoidance could be that a person who is earning high income and paying higher taxes, he can incorporate another entity and divert the income into that entity. It could be a company, it could be a trust. So the overall liability is reduced. Some taxes are paid in one business, some taxes are paid in another entity, and the overall tax burden is low. Tax avoidance is also not advisable because if you are caught, you can end up paying heavy penalties. Reason being that the entity or the diversion that takes off the income has no substance. That entity has no substance. It is just a paper company, paper organization. Next in line is tax planning. Tax planning is an honest way of reducing one's tax liability. In tax planning, you arrange your state of affairs in such a manner that you reduce your taxes but in a legal way. Example of tax planning could be that you have Section 80C in which you make some investments and you reduce the taxes. You invest in PPF, you could invest in NSC, you could invest in bank saver FD, and you can reduce your taxes. Tax planning is an effective way to reduce your taxes. You could also structure your salary so that your total tax liability gets reduced. Tax planning is always advisable. One should always do some tax planning in order to save the taxes. In the various courts of law, tax planning has been held to be a compliant method to reduce the taxes. I hope this video helps you to understand the difference between these three terms and you are able to plan your state of affairs in a better manner and do it in an honest and legal way so that you do not land into trouble in future. Thanks for watching. Goodbye for now.